Hi, everybody. It's Tim Constantine. Many of us try to plan for retirement. We set aside money for investment, hoping that with proper financial planning, we'll have a retirement nest egg that we can live off in our older years. Wise investment means you can enjoy your senior years without having financial stress or having to depend on someone else. Some, though, are now insisting that climate change be a guiding principle in retirement investments rather than secure traditional investment strategies. Are those folks hoping to gamble your retirement on uncertain technologies? Joining me to discuss this very topic is Will Hild of Consumers Research. Will, welcome to the Washington Times.
Thanks for having me.
It's always been my impression that there was some obligation on the part of investors, professional investors, whether that's legal or whether that's ethical or whether that's moral, that they have a responsibility to do the very most with your money that they can. Am I mistaken?
And you're 100% correct. Investors that manage money, fund managers, have an ethical, moral, and legal obligation to be a fiduciary to focus exclusively on returns for the investor.
Now we hear what's called environmental, social, and governance investing principle, ESG investing principles. What is that? What are they talking about?
Certainly. Well, it's billed by its supporters as just another style of investing. So, Warren Buffett is famously a value investor. There are other investors who are famous momentum investors or technical investors. There are folks who say this is just another style, just like that. What it really is, though, it's a stalking horse. It's a way to wedge in their personal politics into the management of your money.
And who's at risk here? It seems to me, I think I'll go back in time, and I think of, say, Solyndra, which the United States government put up millions and millions of dollars for because it was a new, green, friendly solar technology. And within a year and a half, it had failed miserably. The folks who had started it made some money. The folks who invested it, you and me, the taxpayer, had lost all our money. Mm-hmm. So that's one thing. It's bad if it's a taxpayer. But if that's your retirement fund that happens to, that's a bad thing. So it seems to me this is a riskier investment. Is that accurate? And also, who's at risk?
Certainly. Well, there's really two groups of people at risk. There are people for whom they have chosen to invest in an ESG fund. It says that on the label, right? And I may disagree with that. They're free to do with their money. I think they're probably being unwise, but at least they know what they're getting into. There's another group of people that invest in what look like very vanilla investments. So for example, there's a company, it's the largest asset manager in the world, called BlackRock. It has an iShares S&P 500 index fund. You think, I'm just investing in the S&P 500. What you've really done is given your money over to BlackRock to push their politics with your money, and that puts those returns at risk.
All of this is legal, though. Nobody's running afoul of the law.
Well, that's an open question, and it's yet untested in the courts. I would argue, and I think many others have as well, that this is actually a violation of their fiduciary duty. Remember, I mentioned that they argue that this is just another type of investing. So they claim that pushing climate change type investments, pushing pro-choice agenda items, pushing racial and sex-based quotas on these boards of these companies is within their fiduciary duty. And we will eventually find that out in the court of law. But I would argue, caveat emptor, buyer beware. If you have money with these companies, I would get it out.
Where I come from, fiduciary means financial, means a responsibility for finance, not for feel good, not for warm and fuzzy, but for financial. And if it's, again, if someone chooses to do that with their own money, that's one thing. My worry here is there's what's called proxy advisory firms. Explain to people what they are and why it matters.
Certainly. So there's really only two large funds that do this. These are firms that advise large pension fund investors and other large asset managers on how to vote the shares of the stocks that they own. Every year, fund managers, whether it's government or private, have to use those shares to vote for a number of things, boards of directors, shareholder proposals, those kind of things. It's a very cumbersome process to figure out how to vote on these things. And so two firms, ISS and Glass Lewis, provide services telling them, hey, asset manager, we'll just tell you how to vote. And states are also clients. So states like Texas or Florida or North Carolina, South Carolina, all of them, their pension funds hire ISS and Glass Lewis to tell them, how do we use our shares? And unfortunately, they have also started injecting a far left progressive politics into their advice.
You mentioned ISS, Institutional Shareholder Services. In the case of Texas, they actually recommended to the state of Texas not to do any investment in fossil fuels. Now, if you know anything about Texas, you know they got a little bit of fuel in the ground out there. That's an important part of the economy. The elected officials in Texas did not like this very much. What happens? What's the blowback on the ISS of the world when that type of thing comes to the forefront?
Certainly, and it's actually a little bit worse than that because of the way that these contracts and these arrangements are set up. Texas pension fund auto votes unless objected to the way that ISS recommends. So these Texas retirement assets were voted in favor of shareholder proposals that would restrict investment into the fossil fuel industry, hurting the Texas economy, which ironically is what pays for these retirement assets to begin with. So Senator Brian Hughes in that state, who runs the committee that oversees the pension fund and the relationships it has with ISS, called a hearing to look into this relationship and the ways in which ISS had been abusing their fiduciary duty to the state.
My guest is Will Hild of Consumer Research. We're talking about pensions, and we're talking about the responsibility. There are those who would like to use global warming as their guiding compass for investments with your retirement money. These are public funds? These are private funds? Is it all of the above?
It's all of the above. In this particular instance, you have Texas retirement system assets. This is hundreds of billions of dollars of Texas pension funds that were auto-voted by ISS, by Institutional Shareholder Services, for a shareholder proposal that would restrict investment into the fossil fuel industry.
Are they playing roulette with pension funds?
Absolutely. This is a risky and clearly politically driven agenda that is voting for this type of nonsense.
Here's my worry, and you tell me if it's a legitimate concern, is the Teamsters Union was just bailed out by the federal government to the tune of billions and billions and billions and billions of dollars because they had blown through all their money. They had lied, in their case, due to corruption. Mm-hmm. But Joe Biden decided that the federal government, that you and me, the taxpayer, should pay for all these folks and their retirement since their money was gone. In the event that these global warming investments don't pan out and millions of people and as much as $10 billion vanish, mm-hmm. who's going to pay for those retirees?
You're 100% correct to suggest that it's going to be the taxpayers. And this isn't an abstract hypothetical. The Dallas firefighters pension fund blew up because of mismanagement just in the last decade. And it was both the pensioners and the taxpayers who had to make up the difference. The pensioners had to have their benefits cut, and the taxpayers had to make up the difference for some of the shortfall. So when you see companies like ISS and BlackRock mismanage your state's pension funds, ultimately it will be you that's on the hook.
All right, we've identified the problem, but specifically at this point, is anything being done? What action is being taken?
Absolutely. Well, a number of things are being considered. Over 24 states are currently considering legislation, like what has actually been passed in Texas, that would say, listen, if you have as a company policy, like ISS or BlackRock, a policy of targeting a core industry to our state, that could be fossil fuels, that could be agriculture, mining, manufacturing, then we are no longer going to do business with you. You're not going to use our money, our state's money, to undermine our state's interests. And this has been passed in states like Texas and Tennessee and West Virginia, and it's being considered in over 24. So taxpayers who are worried about their own state's money being used against their interests should look and make sure that their legislatures are informed on these issues and that they care about them.
What, if anything, should the average person do to protect themselves, to make sure their retirement accounts are being based on fiduciary planning?
Certainly. Well, if they have a private retirement account, so in other words, like a 401k, they need to make sure that those assets are not invested with companies that are pushing ESG agenda items. So that's BlackRock, State Street, Vanguard. I would look at other alternatives. There are several new market entrants who specifically have entered the market to say, we don't do that kind of stuff. So there's a firm called Second Vote. There's a firm called Strive Asset Management. I would recommend people take a look at both of those. If folks have a government pension, they need to make sure that their pension board hears from them and that their state legislatures and state elected officials hear from them. They need to know that you care about these issues because the squeaky wheel gets the oil. And if you aren't speaking up and saying you want to make sure that your asset, your pension retirement is not being used for a far left political agenda that's going to undermine your retirement, then people aren't going to do anything about it.
His name is Will Hild. He is from Consumer Research, and we're just saying, talk to your broker. Make sure that you are invested in things you want to be invested in. And in the meantime, it's your money. Beware. Will, thanks very much.
Thanks so much for having me.